Hello, my name is MacNevin from the Montgomery Funds, and welcome to this week's Video Insights. We're coming towards the end of reporting season, and we've been particularly pleased with the performance of many companies owned by both the Montgomery Funds and the Montgomery Private Funds. A number of core holdings have reported very strong results, and I'd like to take you through two of them in a little more detail. Now, you can find a recent analysis of these companies on the blog, but after meeting with management, we've become even more excited in their long-run growth potential. The first is Seek, the online employment, classifieds and education company. Seek's results were an absolute cracker, with revenue growing by 38% and profits growing by 29%. Now, while half of Seek's earnings are generated in Australia, it is the international business that is really generating a lot of excitement. Now, for those unfamiliar with the story, Seek is rolling out a model where it makes a considerable investment in the one or two largest job boards in an international market, and then aims to increase this investment as the benefits accrue. This strategy delivered revenue growth of 56% and earnings growth of 79%, which is very impressive for a company that's $5.5 billion in size. What's even more exciting is that the company considers that its domestic education arm has the same scalable benefits as its job board. Seek's education arm contributes a quarter of the group's earnings, which is a meaningful contribution in itself, and may have the potential to sustain growth into the medium and longer term if the global expansion strategy is refined. Seek is the #1 holding in both the Montgomery Fund and the Montgomery Private Fund. Car Sales is also another company in both funds that impressed this financial period. Car Sales increased revenues by 10%, while net profit after tax increased by 17%. The company was coming into the result with an exodus of inventory, as dealers and manufacturers tried to cede power from the listing site. What this experiment did, though, was confirm Car Sales' dominant position in the market. You see, Car Sales has been receiving complaints from the dealers that customers would walk in, almost sign on the dotted line, and then check Car Sales, realising they could get a better price, and end up walking away from the sale. In response to this, the dealers took their inventory off the network. They tried to hide their information, but this is impossible in the age of online transparency. So what Car Sales did was fill this void with virtual stock. And since Car Sales has become the go-to site for customers in the market for a new used car, the dealers that removed themselves from the sites experienced a considerable decline in sales. They're now realising that it's better to go with the tide than against it. And this is incredible market power. But what's even more promising is management's view that Car Sales is a growth business rather than mature. This means that we're inclined to expect more double-digit earnings growth from the $2.5 billion company in the years to come. So that's it for this week. Be sure to check the blog every day during reporting season, as we'll be commenting on the latest results from the companies we think are worth watching. You can easily do this by following us on Facebook and Twitter.